decide that, okay, if the market goes against me, I'm going to be losing maybe $10 out of that $100 which I am using to trade. You see that $10 which I am willing to let go in case the market did not go in my favor. Do you understand? Which is my stop loss. A lot of people don't actually know where to place that stop loss. Do you understand? A lot of people, when they are trading, they don't really understand where to place their stop loss. So, anybody else? Okay, sorry. Oh, can you see the screen now? Is it showing now? Okay, what I was saying is, I'm going to use this as an example. This was a trade I gave yesterday, and you can see I am still holding. Do you understand? So, you can see I enter a buy here. I entered another buy here. Do you understand? Now, I can decide to put my stop loss here. I can decide to put my stop loss here. Okay, you can see that. So if I decide to put my stop loss, sorry, I decide to put my stop loss around uh, here. Now, you need to understand that the way the market works, a lot of people don't understand the way the market works. A lot of people. So you need to understand where you put your stop loss. Now, where you put your stop loss, market can decide to come down. Maybe somebody puts his or her stop loss here. Market can decide to come down, take out this stop loss, and then decide to start going. Decide to start going your direction. So something like this used to happen where maybe the market is going in this direction. The market is doing something like this. You have identified the trend that, okay, we are in uptrend. Then you draw your line just the way I drew this line that you are seeing here. You draw your line like this to match the trend line, to understand the possible next stop where you can enter the market from, and then the market will start going based on the trend line that you draw here. Do you understand? Markets can decide to do one thing because they know that everyone is looking at this trend line, that they are anticipating that if the market comes and touch that trend line, it is going to go up. A lot of people are going to be, placing their buy order here and then placing their stop loss below somewhere around here. So here that they are placing their stop loss, it is called liquidity because there is money here. Shey you understand? All this place, there is money. Now the market can decide to come down, take out your stop loss and start going to that direction. Do you understand? To start going to that direction, then it fakes the breakout. You can call this as breakout, something that is already following a trend. It's already following the trend like this. Then it's breakout. You might think that since it has breakout of that trend, then maybe the market want to start going to the downtrend. It is a lie. It is a lie. The market took out a lot of people's stop loss and then continue. Then it does that. It can decide to do that again. Take out people's stop loss, then continue. Do you understand? So this place that you are looking at now, is called liquidity zone, where the market take out people's stop loss and then decided to push back to the direction. Do you understand what liquidity means now? Hello? You want to analyze your own market, then what you did is you saw a trend line like this, and then you decide to draw your line to match that trend line for you to be sure that, okay, the market is on a uptrend. Now, this uptrend that you are looking at, market can decide to fake a breakout. So faking a breakout simply means that, okay, if the market is doing something like this, markets see that a lot of people are looking at this place, looking at this place, looking at this place, looking at this place to enter from. So this will be your entry, your entry, your entry, your entry, your entry. But what the market does is faking a breakout just to take your money, because market knows that everyone is placing their stop loss below this trend line. Everyone is going to be placing their stop loss below this trend line. Like me now, if I want to enter this, I'm going to place this current trade now. I'm going to place my stop loss here, somewhere around here, somewhere around here. So the market can decide to do something like this again. So I can decide to place my stop loss here, then the market will go up. Sure, you understand? Now, market can decide to do what? Market can decide to fake a breakout. Now, let me explain that. Faking a breakout simply means that this is a trend line, then the market is doing something like this. Like I told you, everyone is placing their stop loss above this trend line here. Now, markets can decide to, because people are looking to buy at this zone here, this zone, markets can decide to come down, break out of that trend line, and decide to start going up again. So everyone that was thinking to buy at this line here, market can decide to push down, hit their stop loss, and then start going up. So the process of market hitting your stop loss, coming to hit your stop loss, simply means that market has taken your money for liquidity. Do you understand? Which is why it is very, very important for you to understand liquidity. Know where liquidity lies. Know where liquidity lies. So if a trend line is uptrend, going up, just know that below here like this, liquidity lies there. Do you understand? Below here, liquidity lies there. Market can decide to come down, break that trend line, and then you will think that, oh, maybe because it has broken the trend line, the trend wants to change. You don't enter immediately when you see that a market has broken the trend line, because the market can decide to do what? Break the trend line. Now, after breaking the trend line, you can decide to enter a sell. That, okay, you want to enter a sell predicting that the market will start going down, and then all for you to just see that, okay, the market just do what? The market just reverse back and then started going up again. So liquidity is very, very important. Liquidity is a concept where you can use to make a lot of money from the market, even if you don't understand anything else. Once you understand liquidity, where liquidity lies, then you are good to go. You can make money. Let me open this account. So on BTC, I want to show you something. On BTC, I want to show you something. Now, can you see my chart? Mhm. If you are trading forex, currency pairs, or you are trading cryptocurrency, you can easily identify liquidity with cryptocurrency and forex. Do you understand? But if you are trading synthetic, synthetic is very, very complex. That's why if you are very, very good trading synthetic, you'll be able to trade every other market. But we have a lot of people that can trade. Uh, okay, thank you. We have a lot of people that can trade. What's it called? Currency pairs that can trade uh, cryptocurrency but cannot trade synthetic because they believe that synthetic is somehow they used to manipulate. But it's not as if they manipulate. Shey you get? It's not as they are not manipulating anything. There are a lot of liquidity in synthetic indices, a lot of liquidity. That's why you analyze and it will look as if your analysis is not correct. Your analysis is correct, but a lot of liquidity is there. It will try to grab as many liquidity as it can grab. So it will look as if when you draw a trend line, it broke that trend line, it reverse back into the trend line and start going direction. It broke the trend line again, reverse back and start going. So it is somehow it mess with your emotion, thinking that what you are doing is not correct. So you need to be very, very sound. But like this chart now, if you look at this chart, let me go to higher time frame. Now, this is BTC. If you check here, you will see something like W. Now, here, you can see space here, a lot of space here. You can see a lot of space, sorry. You can see a lot of space here. This space that you are seeing here, that is liquidity. That is liquidity for you. So what the market did was the market did something like this. A lot of people would have placed their stop loss around here. The market decide to go up, take out their liquidity, and then decide to do what? Start coming down. So another something like that can still happen here because liquidity lies here. Market can decide to push up, take out people's stop loss, and then decide to start coming down. So I may be explaining liquidity, but you can search on some videos online, reference videos online that talks more about the liquidity. My own job is just to let you know the important thing you need to look out for in a trade before you take the trade. Do you understand? So it's not as if when you enter the market, first thing first, I have explained something yesterday. There is this pattern which you should also always be looking out for. This pattern and this pattern. This pattern and this pattern. Now, if you want to know the direction of the market, eh, first of all, go to higher time frame. There's something called top-down analysis. Top-down analysis. Go to higher time frame. Find out what is happening in higher time frame. Uh, Find out what is happening in higher time frame. Let's go to this chart. You can see that this particular market has been, this 1 day time frame has been going up. The market has been going up. So if somebody enter at this place now, the person would have made a lot of money. Now, how do you know when the market, how do you know if the market wants to start moving, if it has taken liquidity? How do you know that? You need to come to 1 week. Now, if you come to 1 week, what do you see in this 1 week? What I have been explaining. What I have been explaining. The M and what? W pattern. It broke out structure here. Now, the M was not complete, so he had to come and do what? He had to come and complete it here. What do you have here? Then it started going up. That is what happened. So here now, there is a lot of what? A lot of liquidity here, which the market has grabbed. Then you see that this is a double bottom. So before a market starts, you can see that the market was selling. It was selling to the downside. Then now the market has started buying. So before it started buying, it did what? Liquidity. Grab some liquidity, then form a double bottom. So if you want to enter a trade, first of all, find if the trade has done what? A double top or double bottom. So if he did a double top or double bottom, just know that he must have grabbed liquidity around here before it started going up, or before it started going. What do you say? Hello? Can I proceed? Okay. So it must have grabbed some liquidity before it started. Please mute yourself. Oh. It must have grabbed some liquidity before it started going up or going down. In the case of this V10, you can see. Now, if somebody understand liquidity well, which I have been explaining, people like me, I have understand liquidity. I've watched a lot of videos that talks about liquidity, so I understand liquidity well. I would have done what? I would have gotten in immediately. I come to 1 week time frame. I have known that okay, it has grabbed liquidity already. So the downtrend is completed. It's no more going down since it has taken out people's money, grab liquidity. Now, what's next now is to be looking for a buy opportunity because it has done what? Please mute yourself. Please mute yourself because it has done what? It has grabbed liquidity here and then it has started going up. Do you understand? So understand this pattern very well, which I showed you. If you understand this pattern, then always look for double top and double bottom, something like this. Shey you understand? Double top, double bottom. This is double top here at the top. So when you have something like this is this M like this. If a trade presents itself like this, you should be looking at entering here to the upside. When a trade presents itself like this, eh? So okay, so sorry, it's the same thing. When a trade presents itself like this, you should be looking at selling here. So this thing that I just explained now, it is what is happening in the market, and I'm going to be showing you countless of this in the chart. This is exactly what is happening in the market. So if you come to daily time frame, eh, you will see W, you will see W, sorry, mhm, you will see something like this. After this W, what happened? The market did what? The market sell down. Then you are going to see something like this again. M. After this M, the market will buy. This is what you need. This is what you should be looking for in the market. This is what you should be looking for in the market. Do you understand? Are you with me, guys? Hello? Hmm. Okay. Okay. So that is what you should be looking. But you need to sharpen your eyes very well, because the way I am drawing this thing now, it is easy. Okay. You should look for M. You should look for W. As I draw it like this, it is easy to, maybe it is M, maybe it is W. But when we are looking at chart, eh, it is not easy to find when you are looking at the chart. So you need to sharpen your eyes to see it. You need to be able to, you need to be able to look at the chart very well to see that, this is the pattern I'm looking out for. This is the pattern. And to let you know that this works very well. And that is what people are using to trade. If you come to the daily time frame, I can show you a lot of it. This is one. What do you see? The market push up higher than this and then decide to do what? Decide to come down. You can see this is it. This is the pattern here. So what do you see here as well? So let me be going so that I will be showing you. If it is a buy, you can see this buy now that happened. This buy to the upside. Mm? If it is a buy, what you should be looking for is what? What you should be looking for is something like this. W, M. He first presented W here. He first presented W here. Then it did what? It sell down. Then it buy to the upside. And then did what? Give us M. Give us another W to the upside. Another W to the upside. So that is how the pattern work. So you can see this is another one here. See, so this pattern is what you should be looking for. It's not easy to find though. You can see it here again. So you can see. This is M here. You can see the pattern and so on like that. You can see W here. W. So this pattern is very, very important when you are trading. So yesterday I was talking about something. mm, You can decide to pick the one you want, the one that is very, very easy for you. A W that broke structure or a M that broke structure. Now that structure that it broke is a confirmation. Example is this. You can see this particular one here. This one broke structure to the downside, decided to go back. What do you see? This is liquidity here. So it formed a double top here and then decided to start going down. So this alone, breaking structure here to the downside, is a confirmation that the market will go down. After it broke structure, is a confirmation that the market will go down. What you just need to do is, after the market has done what? The market has broke structure here to the downside. Your own is just to wait for the market to come back to this zone, form a double top here, the way it formed it here, and then you sell. So you can see the market did what? Market formed a double top here. So it did what? Give you a break of structure here to the downside, and then come back to this top and then sell. So if you are selling, all you just need to do is set your stop loss around here. Even if the market wants to do any funny stuff, you know that it cannot hit your stop loss, because you see this break of structure here to the downside. It is a good confirmation that the market is going to go down. It's a good confirmation that the market is going to go down. So this pattern, I want you to go and look your chart. You can decide to look synthetic indices, or you go to what? You go to currency pairs. You go to currency pairs or trade cryptocurrency. Show me some of these chart pattern and send it to me. Send it to me. Now, for this now, you can see that, and if you are checking break of structure, if you are checking break of structure, don't check break of structure with this tiny wick. It is called wick. This tiny thing that you are seeing here, this tiny line that you are seeing here, it is called wick. Don't assume a break of structure with this wick. A break of structure should be broken with the full body candle, just like let me find one. Okay. Which one? Oh, which one? Oh, which one? Oh. Okay. I'm trying to find the perfect example. Okay, let's use this one. Sorry, I couldn't find what I'm looking for here. When we are talking about liquidity, you can see a perfect example here. What did the market do? You can use this line that I am dragging. You can use it to know where liquidity lies. All you just need to do is, since you check the market, you have seen that, okay, what is the market doing currently? You can decide to place your line, this line now, you can decide to place it here. So you should be looking to enter the trade around here. You should be looking to enter the trade around here, because here is a liquidity. Anything that has to do with market doing something like this, um leaving this particular space behind to the downside, you should be looking to enter the market around here, to buy around here. So that is what happens at this place here. You can see what happened. The market, when it comes down small, e use small leg pass this one small to the downside, and then it started going up. Now here again, when the market did what? The market go down, come go down. Now when it goes up, e use small leg, this one, this leg, use small leg pass this one, then e started coming down. Anytime you want to enter a trade, be it buy or sell, make sure that you see something like this where e go use one leg. I'm trying to talk broken. Had it been everyone here is a Yoruba now, I would have explained in Yoruba to my best understanding, because what I'm just explaining now is what is happening in the market. What I'm trying to explain now is what is happening in the market. Now, here, check this out. When the market comes, go, come, you see this place. The market was rallying round here, here, here. And then immediately the market use small leg pass all this zone down to this place. This one is very, very strong. Now this one, it can't pick, it can't go up. I don't know how best I can explain this thing so that you understand well, so that you will understand very, very well. This one as well is an example. If you check this, I want to explain this particular scenario that happens here. What happened? What do you see? The market was coming, it went like this, go down, go like this, go down. Immediately e use one leg pass this one, this previous one, to the downside, which is what really happened here. You can see that the downtrend was very, very strong, which is this downtrend. Are you guys understanding what I'm trying to explain? So when you look at the chart, you zoom your chart, go to higher time frame. This is a daily time frame, or go to a weekly time frame. Look for this opportunity in any of the time frame, mostly higher time frame. Do you understand? Now, if you have found it in higher time frame, don't just rush to enter. Do you understand? Because you might be entering at where the market wants to do a major pullback. So this trade, this particular at this zone, I want to look for something that will explain better, like this V10. This V10 that I explained before. If you come to a weekly time frame, you will see that the market has present what we were looking for. This is the lowest, this is a lower low. Then when the market goes up, break to the to the upside, come down. It has not completed. This is a break of structure to the upside on a weekly time frame. It is a confirmation that this trade is going to go back up to this place. Then what did he do? Go like this, come, and then came to complete it. Now after coming to complete it, form a double bottom here, and then it started going up again. This is a weekly time frame. Now, we have known from this analysis now that the market has finished the downtrend. You want to start going up because it has grabbed liquidity here and here. It has grabbed liquidity. And where is the liquidity? Here lies the liquidity, this place. Now, how to find entry, even after analyzing on a weekly time frame or daily time frame or 4 hours time frame? You want to be looking for a buy opportunity here. What do? You come to a smaller time frame, like 15 minutes time frame, and look for this same thing that you look for here. You see this scenario that you look for here that presented itself, something like this. Something like this. That is what you are going to look for on a 15 minutes time frame. 15 minutes time frame. That is what you are going to look for, because you already know that the market is buying. So you are going to be looking for opportunities that will present this same pattern on 15 minutes. That is what when you are going to use as your entry. You don't just because you have seen something like this on 1 week time frame and you have seen that, okay, the market wants to start going up. You now just check 1 week and decide the market has grabbed liquidity, is now going up, and then you decide to enter. You are seeing that in 1 week time frame, the market is doing what? The market is green, the market is buying. You might decide to come to what? You might decide to come to 15 minutes time frame and the market is selling, which is what you are seeing. The market is selling on 15 minutes time frame, but on 1 week time frame, the market is doing what? The market is buying. If you go to 4 hours time frame or a daily time frame, what do you see? The market is doing what? The market is buying. When you go to 4 hours time frame, the market is doing what? The market want to do what? The market want to start selling on 4 hours time frame. Now, it may have been that, okay, the market has ended buying for maybe for today. The market has ended buying. The market want to start selling. Do you understand? That is why you don't use one time frame to judge the market. You look at 1 week time frame, you look at daily time frame, you look at 4 hours time frame, you look at what? You look at 1 hour time frame and 15 minutes time frame. Mostly 15 minutes time frame is for your entry. You analyze if you have known that, okay, on a daily time frame it is uptrend. If you want to analyze on 15 minutes, you should be looking for opportunities to buy, not to sell, because a daily time frame is you don't do what you don't do, or you don't go against what the daily time frame or weekly time frame is telling you. If a daily time frame is telling you to buy, and you see that, okay, the market has presented a buy opportunity, you have checked everything, daily time frame is telling you to buy, you don't go to 15 minutes time frame and go and sell. It is a disaster, because before we know it now, 15 minutes go knack, 1 minute, 2 minutes, 3 minutes, 15 minutes go knack, and then that information that you are seeing on that 15 minutes, even if the 15 minutes is telling you to sell, when the 1 hour one daily time frame is telling you to buy, 15 minutes, you know how many 15 minutes we fit comot for a daily time frame? You know how many 15 minutes? So you don't trade against what the daily time frame is telling you. If the daily time frame is telling you that the market is on a buy, you should go to 15 minutes time frame and be looking for any opportunity that will present a buy for you. That is to win. But if you trade against the higher time frame, you are going to bleed. You are going to bleed. Now, part of higher time frame is 4 hours time frame. Part of higher time frame is one daily time frame. Part of higher time frame is weekly time frame. Do you understand? Now, today is Sunday. Eh? If one knack this night, eh, we have entered another week. We have entered another week. You will see another candle form. You will see another candle form. And this candle that will form for the new week can be a red candle. Sorry, can be a red candle that will take us down. And another thing is the buy might have ended. This green that you are seeing here, eh, on the weekly, that the buy must have ended. How do I know if the buy is ended? You need to be able to draw your trend line. What is trend line? You need to do what? Be able to match your trend line like this. You see, the way, always draw your trend before you enter any market. Always draw your trend line because market respects trend line. So if another candle is formed, I am very, very sure and confident that what will happen is this. What will happen? It's the market can decide to do what? The market can decide to go up because it's following a trend. So when it go up, eh, then it can come down. Now, another important thing that is very, very important, mostly if you are trading synthetic. Synthetic is different from every other market. Like I said, you can decide to choose your market. You can decide to say it is cryptocurrency you want to trade, futures or currency pairs or synthetic indices. But as somebody that has mastered synthetic indices for long, which is what I have been trading for a lot of times, I am telling you some of the things that works. Now, if you want to enter the market, your entry, which is very, very important. Some of you in my channel, you can attest to it, seeing me grow $2 to $20 to $50, doing it countless times. And a lot of people will be wondering, how did I do some of these things countless times? Me just flipping $2 to $50, flipping $2 to $100. I have done it countless times. How do I do it? Sniper entry. Sniper entry. Sniper entry simply means you are going to target a place where you know that when the market gets to that place, it will start buying immediately. Or when the market gets to that place, it will start selling immediately without no loss. It is very, very possible, and it is sniper entry. So I will continue tomorrow. I am going to be talking about sniper entry tomorrow. How you can enter the market on 15 minutes time frame. Remember, this night I talk about analyzing market based on higher time frame. You look at your weekly time frame, you look at your daily time frame, and then you can look at your 4 hours time frame. But on 15 minutes time frame, that is where you are going to be executing what you have seen on the higher time frame. Do you understand? Be it buy or sell on higher time frame. You don't trade against what the higher time frame is telling you, or else you are going to bleed and have yourself to blame. Do you understand? Now, if you have any question, you can ask. Okay, the thing is concerning that, I'm very, very sorry. I am using SpectraNet here. You know the way data cost and all this. So what I'm using is SpectraNet. The problem I'm having with this SpectraNet is If I want to upload a video now, it will be at night, maybe when I'm about to sleep, when I am not doing anything else. You understand? Because what I notice is that if I want to upload something, maybe I want to even send a video to my channel, it's as if every other ev it's as if the data will focus on that video and pause every other thing else. So if I connect the data to my TV and I'm using it to watch maybe Netflix, and I'm uploading a video, you won't believe that that Netflix that I am watching will stop, and then the one I am uploading will be the one, maybe they channel all the energy to that video that I'm trying to upload and decide to pause every other thing until that one finish uploading. That is when the rest will now start going. That is what I have been experiencing. So the video is about 1 hour plus. If I want to upload it, hey, maybe when I don't have anything else I want to do, maybe by the time I want to sleep, I will just upload it and then leave it there. I know that, okay, I'm not using the data to do any other thing else. That's the challenge I am having. Do you understand? So I will upload everything. This one also is recorded. I will upload it. And concerning the group, I'm going to create the group tonight and send it. I've been busy since morning. Sure you get. I will create the group and then send it to you guys. Sure you get. Yeah. Any other question, please? Yeah. Yeah. Mhm. Yeah. Yeah. Don't worry. I'm going to sort everything out. Most especially the group. I'm going to sort it out tonight. Then I'm going to send the link to everyone. Mr. Ashinaza, what about you, sir? Okay. Yes. Yes. Every market has where you can set buy limit, sell limit. So we have it in that if you are trading futures, you are trading on exchange like Binance, Bybit, and the rest. Shey you get. Now this exchange has limit. You can set buy limit, you can set sell limit for your trade. In case, okay, you have analyzed the market, maybe for instance now, you see this trade, um you see this trade, me myself, I have seen that where the liquidity lies on this. Can you see my screen? Me looking at this chart, I have seen where the liquidity lies, and I have seen that, okay, what will happen is this: the market will decide to go like this, come to this place, and then do what? Go down. That is what the market will do. Do you understand? So I can decide to do what? I can decide to set my what? Limit. You see here, I can decide to set my limit here. So this line now, eh, this what's it called? This MT5. If you click on this small this thing that I circled, that is where you can set your limit, buy limit, sell limit. So if I click on it now, what I just need to do is do what? Drag it up, and then you can see it has indicated here sell limit. Shey you understand? So if I click on it, I just need to tap on this arrow. I just need to tap on this arrow, and then I'm going to place. So if I place it like this, it has been placed. So if you come here, you can see that the limit has been placed. So even if I am not around or anywhere, immediately the market does what? Immediately the market comes to that place. I don't need to be around. And as well, you can edit this limit, modify, and then I just set limit. I did not put stop loss. I can decide to set my stop loss, put my stop loss above here like this. I can decide to put my stop loss around here. So immediately market to get to my buy limit, my sell limit, it will trigger. And then if the trade will not want to favor me, maybe the trade wants to keep on going up, immediately you get to my stop loss, it hit my stop loss and take me out. I don't need to be monitoring the chart, everything. The same thing applies to that video you watch explaining on the future aspect. That's why I said you can decide to say, okay, it is features that I want to focus on, or you decide to say, okay, it is currency pair, or you decide to say, okay, it is volatility indices, synthetic indices that you want to trade. Do you understand? So it is the same pattern, just that we are using MT5 to trade currency pairs, forex, synthetic indices. But futures, you are using an exchange. Do you understand? So on exchange, if you are trading futures, the same buy limit, sell limit, everything is on those exchange. Just that the interface are different compared to this MT5. Yeah. So I believe I have done justice to tonight's class. Tomorrow we are going to talk about sniper entries and how to take a perfect trade. Do you understand? So that will be all for now. Thank you. You're right, sir. You're welcome. Yeah. Okay.